Hey everyone, thanks so much for tuning in. This is your weekly Precision Markets office hours hosted by Markets coaches Nathan and Brian. We host these every Tuesday at 12 o'clock p.m. At PST time, and we dedicate these to being a place where you can ask questions, have charts, and have more visual format to the questions that you may have. So for those that this may be your first time joining in, the format is that you will ask your questions within the chat. Nathan and myself will take turns answering or chime in, and we'll answer them in the order that people receive their message or make their questions within the chat. Please be respectful, though, of when it's somebody else's time for a question. We're going to try to make sure we can knock out as many questions as we can. And if you don't get a question answered, don't worry. We have a Thursday office hours call at 12 o'clock p.m. Pacific Standard Time. We also have every Sunday backtesting sessions, and we'll also answer your question in Discord. So with that, we'll go ahead and begin. Let everybody ask their questions within inside the chat, and then we'll answer them in the order that they're received. Anybody have any charts maybe they wanted to share, or anything that any traits that they're taking, anything that they're maybe even confused about? Don't be shy, guys. This is your
Is
time.
it
So
is
ask
it
any
fine if I
question.
just use the mic?
Sure, go ahead.
So, specifically for the time frames, like I was having trouble with this today. Um,
Okay.
I know we find a higher time frame POI first. Does it really matter? Like, I know that some people were saying, I was reading in the chat that it's fine if you just use like a 1 hour time frame to find your POI from, and then go on like the 1 minute and the 30 second to execute on. Does it have to be a 15 minute, or is that like a trading plan rule, or does that depend on what your plan is? I guess. And also, like, is it fine if we even use like a 4 hour or like a 2 hour? What do you think about that?
Yeah. So I'll go ahead and chime in first about that. So when it comes to time frames, you can have a couple of much different time frames. Time frames is not really relevant to a point. The reason why I say is because your trading strategy is your strategy. Whatever time frame that you use will just end up depending on what time length that it takes for your trade idea to execute. All right. So the reason why I say this is because if you're a swing trader, you're going to use what we consider higher time frames, but you'll probably get the same risk reward or same potential results as using maybe the smaller time frames if you want to be a scalper or intraday trader. But the key in every system, and let me go ahead, I'm gonna go ahead and share something really quick, and y'all let me know if y'all can see it. Can y'all see this?
Yeah.
Looks like a whiteboard.
Yeah.
All right, cool. So trading basically it works like this, right? There's three key levels that you need to have. And so you can divide it really into a pyramid. Actually, let me do two things real quick. Okay. You can divide it into a pyramid like this. All right. At the first level, the most important thing is direction. The second thing that's important is finding your points of interest. And the very last thing is entries. Now, I want you to take a look at this and really quickly. One, look at how big direction is. Look at how big POIs are. Look at how small entries are. Do you see the physical difference between the two sizes?
Yeah, definitely.
Entries are not that important. That's the whole point. Most important thing is that you get a direction. The reason why we get a direction is the reason why we need a direction is because you could look at a lower time frame, you can think the market's going another way, and you can get slaughtered. And the reason why is because on the lower time frame, it doesn't exactly always give you direction. You need a higher time frame bias to be able to know where to take trades from. So that's why we use maybe, for instance, for the direction, you might use the 4 hour time frame. You might use M10 or M15 to be able to find points of interest, and then you might put your entries on M1, right? But the same system could work if you use the daily, you use M30 or H1 for your POIs. And you may, for instance, come in and on your entries, you may take M5 entries. Now we changed the time frame, but system-wise, everything is the exactly same. So that's the reason why you'll see in the chat that we talk about having we use a higher time frame basis so that we know the direction. Then once we know the direction, we take trades in the given direction where there's the most momentum. And that's why we look at, for instance, maybe a POY or 10, 15. Once we see the order flow going, then and it comes into an area that we're interested in, then we like to, for instance, go to the lower time frame and then put an entry in. But generally speaking, this is how we have everybody's strategy structured. Now, you don't have to, for instance, take entries on M5, M1. You could take entries on the same time frame you find your points of interest. It just depends on what you feel most comfortable with. Does that make sense?
Yeah, that does clear up a lot of things because I found myself just like spending too much time on the M1. That's why I've been losing a lot. But yeah, thank you. That makes a lot of sense.
No problem. Yeah. If you kind of get stuck on looking at M1, you'll get an idea the market's going one way, and then next you get blasted and you wonder why. You go back and look at the higher time frame. The higher time frame's telling you, oh no, this wasn't exactly what we had in mind. So that's something just to keep in mind. Nathan.
Hello, Brian. Hello.
Yes.
Hello.
Yeah. Hello, Brian.
Hey, how's it going? Who is this?
Yeah, it's Hey Goku.
Oh, hey. Do you have a question
how are you?
answer for you?
Yes. How are you?
Oh, good. How about yourself?
Yeah, actually, I want to know when we are using the higher time frame, then this is working for swing trade.
Say that one more time because you cut out in the middle of what you were saying. I didn't hear you.
For higher time frame POI.
Mm-hmm.
Yeah.
We will take a swing.
To take swing trades on?
Yeah.
Well, you can swing from 15M zones to 4-hour zones, or from maybe 4-hour zones to daily zones. It really depends on how long of a swing you're willing to take. Are you talking about maybe a weekly sort of swing where you'd hold it throughout the week, or are you talking about more of a intraday sort of swing?
Yeah, intraday swing.
I would say the 15M combined with the 4-hour without using 1M entries is totally fine. What do you think, Brian?
Yeah, I think the same. It just depends on what you make your targets. I'll show y'all a visual example really quick. All right. So here we have EU, right? And so let's say, for instance, I'll take, for instance, here, right? Can y'all see my trading view screen?
Yeah.
Yes.
Mm-hmm.
Yes.
Okay. So let's say, for instance, right here, we have a break of a supply zone, right? So here was a supply.
Please, can you make one screen? Sorry.
Can I do what? So here's the supply zone, right, on the 15-minute. And let's say price broke this. And if you use the reaction point, God, this thing is annoying. Sorry, guys. This Zoom window is on top of my laptop screen. Okay. All right. Say, for instance, price breaks here, right? And so now you take the reaction point, and here's a demand zone. And so we have a demand right here on M15. Price comes and taps into it. So you go down to your 1 minute, price taps into it here. Say, for instance, we have a chalk. Can't remember where it came down to exactly. It chalks here. And say, for instance, you got in with your trade, something like this, right? Cover some spread and you're targeting. And now you're looking to see, all right, where can I target my trade, right? Well, you have a couple of things that you could do. like Nathan mentioned, we could do intraday trading and say, all right, I just want it to hit 1 to 5, and it hits 1 to 5. Great. You could also come to the 15-minute and then say, okay, from a 15-minute perspective, here we probably have some resting liquidity. So what we want to do is say, okay, I'm gonna make my take profit target here, and that might have worked out. I think it did. Yeah. So that could have worked. But this would be considered more of an intraday swing. You could even come to the 4-hour and say, okay, knowing that my 4 hours where it is, knowing that my 4 hours where it is, we took that liquidity. I might make my target, for instance, on the 4-hour, something maybe like right here, where we have, this might be, for instance, your target. And this might be a 4-hour swing, but this would take a couple more days to do than doing this other swing. So you might, for instance, make your target all the way up like this. And that would be more of a multi-day swing, because in the course of a day, it didn't even get close to hitting that. Does that make sense?
Yes, yes.
So really just depends on how you want to do your targets. If you want to be a swing trader, you could use totally different time frames as well too, to be able to kind of be just doing like swing trades specifically.
Okay, actually today I go through the US 30. First time I see this. Hello.
Mm-hmm.
My voice is hello.
Yes, we can hear you.
Yeah, actually today I see first time US 30 chart. I feel better. It's a euro. It's better than Euro ST. I feel like that because over there I completely caught a support, a resistance, and trend line and supply and demand zone. And very easily I got that area.
If you're starting out, definitely don't recommend you trying to trade US 30. Start with Euro USD to get some of the basics down. That's a great place to start. US 30 is not a good pair for first time people getting into trading. The properties of it work a little bit different than Euro USD. Euro USD is one of the most friendliest as well. So I'll keep that in mind while you're trying to learn and get down to master the process. Once you spend enough time mastering like Euro USD, then you would consider backtesting US 30 to move into that. Would you agree, Nathan?
Yeah, what is it? US 30. It's friggin' volatile as hell. Crazy. Throws a lot of wicks and it's kind of all over the place too. So it takes a while to master that pair. And definitely EU is super friendly to start with. And I think the concepts and everything around precision and what we teach is like it kind of everything comes together in Euro USD because it's so friendly. No, US 30, I'm not saying it's bad. It's great, but it has totally different characteristics than EU. Same with GU as well. Like I've been trading GU for the past, I think, 6 weeks now. Totally different than EU. Totally different. And I've actually gone back to EU now because it's so friendly, you know.
Mm-hmm.
What about gold? How is that in comparison compared to US 30 and Euro USD? So volatility wise or beginner friendly wise?
Gold's not beginner friendly either. We're not saying anything about these pairs being bad. It just takes a different level of mastery because US 30 is a trend. It likes to trend a lot, but it's very aggressive in the way that it trends. GU is a little more aggressive than EU. Gold is definitely more aggressive. It throws lots of wicks. But when you don't have a concrete system and discipline down, that's really the main thing, this discipline. Once you have that down, then you'll be able to approach something like a gold US 30 or GU to be able to then start applying, the same ideas and concepts, but understanding the characteristics. Every pair has its own characteristics. US 30 is a stock indices. More than likely, it wants to go up, but it's also heavily influenced by news. Gold is a safe haven when there are economic times of distress. So it tends to skyrocket when there's things like high inflation or bad economic downturns, recessions, et cetera, because people hide their money. It also will sit there and consolidate for an entire week. GU is really aggressive. So GU will take off, whereas a move for EU might move like 10 pips. That same move on GU could move 30 to 40 pips. So it's just understanding those characteristics, understanding the characteristics like the pair and understanding. GU is going to throw a lot of wicks. EU likes to use decisionals. The more time you spend on the charts, you'll begin to understand it. Some people like more aggressive pairs. Like, for instance, I traded NASDAQ exclusively for 6 months. So I began to get used to the aggression of it, but it also wasn't one of the first pairs I started with either, too. So,
yeah. And US 30, that's a index that it's average weighted, which means that like the largest companies like Apple and those big boys are the ones that will move it more
Correct.
than smaller. So, like, for example, would it also be wise to have an idea and check out the various quarterly earnings and such info also with the large ones?
Yeah, I mean, that makes a big impact. So
Yeah, for
if
sure.
you have a background in stock trading, it's going to help you to really understand NASDAQ, US 30, SPX 500, because they're all based upon companies and the performance of those companies and the likelihood of them to continue to perform. So those things help, but that gets into the fundamental analysis side, which is an area to start, an area that you can really focus on. But it's good to get a foundational understanding of technical analysis so that you can see when both technical and
fundamentals
align. So
yeah, because like NAS and US 30, they have two different kind of indices. I think US 30 is weight based and NAS is market cap based. Or I think they are separate, like indice wise.
no, or they're both weighted on the performance of averages of the companies. The difference is US 30 only has 30 companies. NASDAQ has 100 of your top 100. It's mostly tech companies. So it's a little bit, if the tech industry is getting hit hard because of missing earnings calls, mass unemployment, consumer pessimistic outlook, NASDAQ's going to take a bigger drop than US 30 because NASDAQ has more exposure to tech.
Yeah.
So if the economy is not doing that resilient, but tech companies are finding ways to raise funds and have better customers, NASDAQ will probably go up first before US 30 does. It's just understanding the minute differences between the two, but also using your market structure to figure those market structure, liquidity concepts, supply and demand to back up any idea. Because all we trade is really what is the highest probability thing to happen. None of us have to worry about being right. That takes a lot of pressure off your back. You just have to worry about following your process to the best execution possible, and everything else should play a part because it will help you be where the 78, 80, 90% probability thing is going to happen, not the 10% that you're praying, wishing, hoping, and gambling for it to happen.
Yeah, and also like with the relatively good risk to reward wise, you don't have to be right so often either.
Exactly.
I think Andrew had a question. Andrew, if you want to come off mute, feel free to. Oh, I'm just not seeing your chat. I'm sorry.
Yeah, I was just wondering if I could chime in. Like you were talking about the indexes and if I could offer an opinion. I'm not by any means an expert, but there's a couple things that I found that actually work really well as long as you, like you said, if you manage your risk properly. I found that basics on US 30 and NASDAQ, they work like trend line breaks on all the time frames seem to be pretty valid. They respect M and W patterns fairly well, head and shoulder patterns. I've actually found like the less complicated that I've made it, the easier they actually move. Like, you can take like a 1 minute trend line break, and that thing US 30 can get you like 70 or 80 pips. And I know not everybody's a fan of quick scalping, but like I said in the chat, the reason I'm here is I've been trying to trade pairs, and I find pairs way more difficult than indexes actually. So I guess obviously
Yes, me too.
your preference, right? But I think I don't know which one of you guys said it off the start, but I think US 30 is actually really simple if you keep your leverage low, if your account.
Yes. Me too.
That's just my opinion.
I think the reason why, Andrew, you probably find the reason why you find pairs probably harder to deal with than US 30 is because the good thing about the US 30, like I mentioned, it trends a lot. So it's going to go into a given direction. Like the overall bias is usually a buy. If you went to a weekly or monthly time frame, it's more likely a buy. When you have an economic downturn, it's a sell. But it's only a temporary sell, because if companies continue to do bad, then the United States will be over, period. So that knocks out like half the theory right there. The other half is,
I find it way based on fundamentals. It's very easy to predict and to react to. It seems to respect moving averages a lot too. Like, I don't know if you guys play with those. Like, I know that's a lot of, it's kind of fringy in a way, right? A lot of people think that stuff's goofy, but I find like the basics, the easiest things with the indexes work if you just have patience.
yeah, well, in all things too, right? So
Yeah,
with the currency pairs, there's more people claim that there's more manipulation, and that definitely can be seen. Euro USD tapped a couple weeks ago parity, and as soon as it tapped 1.0000 with 5 zeros, price skyrocketed. You can't tell anybody that there's no such thing as manipulation, but that's just kind of how the market works. There's the indices are more news rumor based. And while there's certain things that you think, you have to deal with a lot more speculation to figuring out, okay, why might this thing continue? But overall, it's going to be a buy. So some people find that easy. Some people also find it hard because it can do like NASDAQ did today, right? NASDAQ, a lot of people had a buy bias, and it ranged for the morning, and then it just dropped, and then it just took off, and then it just pulled back. For some people, that would wipe out accounts. For others, that they made a lot of money. It just all depends on your perspective. Like all these things, all these pairs are all going to be based upon what do you feel most comfortable with. Your strategy may be more tuned, for instance, to a pair that's less aggressive. Starting out, you may need a pair that's more aggressive. Like I started my very first trading with Forex with GU. Like I love GU, even though it was like super aggressive. But that's where I got my start from. I found EU to be slow. And then I don't know, as of recent, I've just changed between EU and GU. Like it's really weird. But over time, like as your trading evolves, I think you'll get a better understanding like how to deal with things like aggressive pairs that like to trend a lot and stuff like that. That's the reason why I like the NASDAQ, because I would trade GU and NASDAQ. And then I switched to just trading just NASDAQ for like a whole 8 months because I just like the fact that it trended very well. So every pair has its own, what's it called? Own characteristics. You just have to take
personality.
Yeah.
When it comes to stop loss size, what's relatively good? Like on indices, what do you think is a good stop loss there? Like 2 points. That's probably very small in comparison to the how large it is. Do you have any?
I think the market will tell you. Right,
yeah.
The market would tell you how big's the candle you got to cover, how far are the lows that you got to cover. There shouldn't be a predetermined, pip count for a stop loss.
No, an area wise, like
on average,
40 points. Is that much or little in regards to this type of trading when it comes to US 30?
It really depends because, like Nathan said, the market's going to tell you what your stop loss needs to be. I'm not a fan of saying that this is the average stop that I use, because then that locks your mind only into one way of thinking. And when it becomes bigger than that average, you tend to shy away from trades. When your trade idea is not based upon the size of your stop loss, your trade idea is based upon all the other factors that you look at when it comes to a trade. Occasionally, there may be times where, for instance, I may use a 50.00 stop And there may be times where I may use a 10, and there may be times where I use a 12, and there may be times where I use 15. There may be times I use 40. Like, it's not going to be average. I'm going to cover the area that I need to cover, because that's the thing that's not consistent. It's not always the same area. So
Yeah,
I really
I
at
do
the
it
market.
based on how much I'm willing to lose. It's not point based particular. Like, typically I won't go over 40, 45 pips, but for me it's just a money thing. It's like, am I going to put up $1,000, 2,000, 500, whatever, and then the pit value I don't really care about. It's the money for me.
Well, that in hand with how big you should cover, like depending on your lot size on the pit count.
Yeah, totally. Like, if I'm pretty sure about the trade, you know, I might only have a 10 pip stop loss, but I might risk $1,000 in that 10 pips, right? Because I want to leverage it a little higher. But yeah, it's I like I said, I'm not an expert, so maybe I shouldn't even chime in. But when I found success, it's not typically a pip or a number thing for the stop loss, but I won't go over 50. To me, I personally think that's a bad trade if you're any more than 50. It's a poor entry.
It
depends
all
what
views
time.
are welcome. All
Sorry,
views are
Brian.
welcome. Oh, no, go ahead.
Oh, no, I was just going to say, definitely depends on the time frame too that you're using. You know.
Yeah.
Have any of you any experience with the Russell 2000? Is that something along the lines with the S&P 500, like trading wise, since they're relatively small, or?
I don't trade it myself.
No, I never traded it, but to be honest, like, most of the indices all correlate together. You could go trade the German 30 or German 40, depending on what your broker has updated it to, if not. And it tends to go the same direction as the NASDAQ, S&P 500, and US 30, just because indices are made to go up. They're not made to go down. If they're going down, it's a sign that the economy is doing really, really bad, and that's not good. So that's just stuff to keep in mind. Like it's just personality characteristics of the pair. You know, indices overall bias is supposed to be a buy. If it's not, then you could look at the economy and tell everything's going bad, which is the reason why NASDAQ, US 30, SP 500 have been dropping for months, because the US economy is afraid about going into recession. Like, it tends to make sense, kind of like how Andrew said, just keeping it very, very simple.
Yeah.
Yeah, no, I think definitely for starting off and learning the concepts, if you can trade EU, it's proper friendly. But if you don't see those concepts in your eyes on EU and you're fine trading US 30 and all the indices, it's totally fine. You know, do what you want to do, what you see,
Right.
because we're all different. Like, you know, we're all so different. Like, US 30 was one of my favorites to trade. I used to trade all the fundamental stuff with scalping until I got absolutely hammered one day. And you know, US 30 was my favorite, and it was hard for me to break away to get to EU. But when it came to supply and demand concepts, I was able to see them visually a lot better with EU. So I was able to move over. So it's really down to what you see, because we're all so different. We interpret everything totally differently.
Mm-hmm.
Yeah, that's a good point. I just signed up for this group today or whatever, because I want to try to get better at pairs, and I'm intimidated to even start trading pairs because I'm just so biased and focused on indexes.
Mm-hmm.
So that's why, like, I want some help, because I've been trying to do it on my own, and I've blown a couple accounts trying to figure out pairs. So I agree with what I think it's Nathaniel just said. Like,
Yep.
you get so zoned in on kind of, I'm not going to say mastering, because I'm not a master, but and then you branch onto something else and you're like, holy shit, this is like a totally different language here. So anyway,
Mm-hmm.
I'm excited to be here. Thanks, guys.
Yeah, welcome, bro. Welcome.
Glad to have you.
Nathaniel, are you really that jacked as your picture shows?
I am, but that's in good lighting.
I thought I was in good shape and had good lighting in my gym. Jeez.
When Nathan arrives at the charts, he flexes a pec, and then the market moves in his direction.
Listen,
Oh, that's how he's the market mover. He just throws up a flex and they react.
I've taken so many hits, bro. It's just that's how I'm able to put on the size.
Every time he takes a loss, he does 50 push-ups.
Yeah.
That's probably actually a good way to perfect the mind. Every time you do something stupid on the charts, just do push-ups and get jacked.
Yeah, for sure.
All right, guys. We've got time for one more question, guys. Anybody have any more questions that we didn't get a chance to answer?
Actually, yes.
How many years have you guys been trading?
I've been trading since 2019, in 2019. So coming up on 3 years.
I've been 2 years, and I think 2 years and 2 weeks now.
Congratulations. Happy trading anniversary.
Thanks, bro.
You
Like,
guys
what
stick
about
to
Rob?
a specific time frame?
2 months.
Oh wow. But wait, somebody asked about time frame?
Yeah, like do you guys start with a top-down analysis when you're looking for your trades, or do you kind of just stick to like a 15-5 1 minute, or does it change depending on the market condition with the pair?
Personally, for me, it's always daily 4 hour, 15 and 1. So it's mainly 4 hour direction for intraday, and then 15 M POIs, 1 M entries. That's it for every single pair.
Oh wow, okay.
Mm-hmm.
I use
Do
daily for direction, kind of like how Nathan uses H4 for H4 direction. And I use either 15-minute or hourly POIs, and then I'll take my entries either on 15 seconds or 1 minute. So it's always the same with every pair.
How long have Rob been trading?
I think around the same time.
3 years ish.
Yeah, somewhere between 2 to 3. We're all about the same.
Do you have any financial backgrounds before you started trading, or like working finance, or?
None for me.
No,
I'm a personal trainer.
business owner.
Hey, is Rob from Canada?
Nathan
Sounds
has
Canadian.
a very dangerous body.
Yeah, Rob's from Canada.
I knew I recognized the accent. Cool.
All right, guys. Thank everyone for the questions. If you have a question that you think of, didn't get one answered today, feel free to ask us inside the Discord group. Don't forget Thursday, we have our at 12 o'clock p.m. Pacific Standard Time, GMT -7. We're going to have our a power hour with Rob. And guys, please sign up for backtesting. If you haven't done it yet, I would bet my grandmother's grave that it's the best way for you to be able to really improve in your trading, because it gives you a chance to see the things that you're doing. You get feedback from the coaches. It'll help you to really kind of improve it. Almost every person that we've seen go through and do the back testing that's been in the community, within months later, they really leveled up their trading, got rid of a lot of their losses, and really grew. So it's definitely a great opportunity for you to be able to really, really grow. So definitely sign up. Let Rob, Nathan, or myself know. Yes.
Sorry, ignore me. Can I make this Sunday for the backtest lead?
Sure. We'll sign you up. We'll let Rob know, and Rob will get in touch with you on what you need to do. But just be available, and we can have you be our backtester.
Thank you.
No problem. All right, guys. Good stuff. I'm looking forward to it. I can't wait for Sunday.
Amazing.
Thank you,
And,
guys. Have a good rest of your day.
No problem,
Have
guys.
a great evening, guys. Have a great
Y'all-
evening, entries.
Y'all take care.
See you guys.
Bye.